Hey everyone, we're back at FIA BOCA. It's Wednesday. I'm joined now by Todd, who's CEO of Trading Technologies. Keith,
great
welcome.
to be with you.
Thanks for joining us again. Yeah. Last time we saw each other, I think, was in snowy Chicago.
It was the winter days.
Much better experience here, I would think.
Yeah, without doubt.
So I wanted to say congrats. Trading Technologies announced last week that you guys have acquired Axe Trading. This is expanding Trading Technologies' multi-asset class offering. Can you explain a little bit the significance of this acquisition?
Yes, it is a very significant moment. For the first time, next year's our 30th anniversary of in existence, but it's the first time TT's moved materially into a new asset class, fixed income. Mm-hmm. The Axe Trading business is focused on that marketplace, corporate bonds, municipal bonds, obviously as well as treasury, but we're already in the treasury market. Mm-hmm. Brings about 30 customers in Europe and in the Asia Pacific area. Mm-hmm. So a really good foothold with great features and functionality on the product. Mm-hmm.
I wonder, was the reasoning behind this, like you mentioned the geography part of it, is it really not only asset classes but new geographies as well for you guys in terms of customers?
Its first base is asset class, but without a doubt, and you're absolutely right, and you recall us discussing this about the globalization of TT, it really hits that strategic spot as well. But it's important to remind yourself that the fixed income market is different from a derivative market, which is a central limit order book market, the club market as it's called, whereas the fixed income world is all RFQ. It's quote driven. It needs sophisticated software to help price illiquid corporate bonds, and Axe Trading brings that to the TT platform.
Trading Technologies also recently announced plans to make Eurex as a Eurex Exchange's platform. It's called Enlight, and available on the Trading Technologies platform. The goal is to get this rolled out by the end of 2023.
Well, that's absolutely right. But to put it in context, the platform that TT now has our own functionality, our OMS, our EMS, but what also it can do is bring other partners' products. Previously we'd announced KRM22 risk products being integrated into it. An earlier one was Bantex, and also now the Enlight product from Eurex. What was important as well with the announcement with Eurex was that it was another exchange, and they see the value of our distribution across our network, be able to provide the features and functionality that Enlight represents to a much wider audience.
And what are the implications for increasing market liquidity and volume growth as part of this partnership?
Well, on both fronts. I mean, we should just momentarily reflect back on the last year. Undoubtedly some tailwinds behind our business with the amount of market volatility that's there. As we sit here in BOCA, every day there's another related big risk factor in the market. On Monday we had a record volume. Now, to your specific question, all of these features and functions, including the Enlight, will help drive volumes across our platform. Frankly, in that particular case, profit for Eurex and profit for us.
You also, I saw, enhanced your order management system. I think this was in partnership with Ateo Finance, to enhance it with a comprehensive post-trade allocation service. This is really for sell-side banks, brokers, and FCMs. Is this kind of like an unmatched value proposition today in the market?
It's certainly leading edge. The combination of the two companies. We've known the company Ateo for a number of years. Origins are in France, but high reputation for good quality technology. They've deployed this allocation engine in a number of companies in support of actually often the middle office features and functions that they have. So we like their tech. By partnering with them, we accelerated the time to market probably by 18 months.
Wow.
To have the comprehensive offering for our OMS. So all of the classic features, we have the EMS already, but the OMS features and functions, care order functions, the ability then to be able to take very sophisticated allocation models that the large banks have and apply them was out the box. And it was integrated, if I recall correctly, within 3 months.
Great, that's awesome. Keith, you just mentioned we're experiencing market volatility, there's geopolitical risks, interest rates, inflation, all of these things. Last year you said, you experienced massive momentum as because of or as a result of these sort of this macro picture. Obviously today it continues. Do you think this, will continue with this high volatility throughout the year? And kind of what's your take on all of these risks that we keep seeing left and right these days?
Well, there's several questions bundled up in that question.
Yes. Take your time.
So I don't think it's anybody should be sitting here and firmly predicting exactly what's going to happen in the future. If anything, one should read out of the last 12 months that the future is unpredictable. And there is risk there.
Yeah.
And the angle of attack of risk isn't one thing. It isn't, for example, just a cyber attack, which was obviously an attack on the industry that happened a few weeks ago.
Yep.
It's the whole liquidity flow and the consequential contagion from the crypto crisis rolling out. So risk is not one thing. The regulatory risk still stands for all firms out there.
They're always going to be there, aren't they?
They're always going to be there. And it's just an interesting conversation I was having with a senior player in the industry, pointing out to me that the regulatory risk has resulted in firms spending billions on penalties. The cyber risk at the moment is still a serious risk. Has only had a dramatically smaller number allegedly paid as a consequence.
Sure.
So we've got to get an understanding. So go back to your question. From the macro side, I think everybody should be really looking at risk through the enterprise risk view. An enterprise risk view is holistic, looking across the range of challenges in your marketplace and the way you deliver your services. From a TT perspective, we're resilient to it. Not a significant amount of our revenue is dependent on volume. There is a small element, but it's relatively small. The most important thing we have to make sure is our capacity planning for very large growth.
I see.
Which we have processes in place, but I'll be frank, we're revalidating those because the spikes in these volumes are going up, not quite exponentially, but certainly dramatically.
Yeah, for sure. And I think with the risks that we just mentioned, I think I hope that you would agree. I mean, FIA, CFTC looks to be taking a pretty proactive approach to the cyber incident that happened recently, with sort of taking a deep dive into that situation, seeing what happened, and kind of to understand what can be provided for market participants, or some kind of guidance for market participants in the future. And also another thing that I've heard a lot about during this conference is post-trade settlement and the demist sort of initiative, right, with market participants to, on the one hand, it's market volatility, so you need to be prepared for larger trading volumes. But at the same time, there's also this concept of we need to move from T3 to T0, or we're moving to T1 according to SEC and things like
on the
that.
Equity side,
But ultimately, everybody wants things to be as instantaneous as possible.
Well, the derivative market has been pretty instant for most clearing processes before. But I think it's quite natural and appropriate that regulators and FIA need to be proactive and get engaged and help participants make sure that they are undertaking best practice. My view on this is that there's already enough regulation out there, both in Europe and the United States. And if we just take TT as an example, we are vetted on a security point of view by over 300 firms. So that's not one team, my team.
Uh-huh.
There's 300 teams.
Uh-huh.
So the natural maths of that is the probability of having a problem not identifying something is less. Mm-hmm. No one can ever say it's not going to happen to us. It's one of those things where issues do happen. What is happening at the moment, and I've been reaching out to my competitors, and our position is what happened the other day was an attack on the industry. Mm-hmm. It just happened to be via ION. It was an attack on the industry. None of the competitors that I spoke to want cyber risk to be a competitive advantage for one over the other.
Right.
So we are working on how we cooperate as well with vendors to help ensure we can create a cyber circle around the industry to give greater protection, to have a faster flow of information in real time when unusual visibility of threats is occurring. We're all monitoring every day. We see patterns of types of attack and where they're coming from. I mean, it happens all the day, and some of your listeners may not be aware of it. This isn't just one event.
Sure.
It happens continuously, and so, but you can see where these patterns are. And so how do you actually disseminate the information very rapidly? You have to have basically a limited community. So we're doing some work with competitors and venues to see if we can improve the transparency between us without being threatened.
That sounds like a very, very important and
it is
initiative.
Yeah, frankly, it is. And it's one that we're all united on. That we need a healthy, just as the marketplace wants to be a free and open market with participants acting openly. The same is true from the point of view of the infrastructure that underpins this marketplace. We want it to be robust and secure for everybody.
So in our previous interview, you had mentioned that Trading Technologies was working for solutions for for the digital asset space. I know that we can say that we're still in what they were terming last year as a crypto winter. Yeah. I mean, some of the effects of the things that happened in the crypto markets and with crypto firms last year kind of left probably a bad taste in a lot of for a lot of people. But I just wanted to know kind of what you guys are working on behind the scenes.
So we've continued with our investment to extend the connectivity. We partnered, we announced it with Talos to extend our connectivity to the crypto markets, and we're seeing a steady flow of trading. As you rightly said, it's sort of a crypto winter. It's not the hot topic of the moment. Our view is, though, the market now is heading to a better level of maturity. We are going to see some appropriate regulatory intervention in it, which will make it a better marketplace. So when you look at the medium term and the long term, without any doubt, I'm actually personally much more optimistic about the digital asset world of the future than I was before the events of last November.
Well, it
was too Wild West.
Yeah, in a sense, those events weeded out the whatever you want to call them, bad actors, whatever else. Yep.
Yeah, and I think we need to, I know I referred to this comment, we needed a few more adults in the room at that time. We still need some adults around, and I think that people are being more appropriate now, or thinking about things. The answer to a mission-critical industry isn't a new shiny toy.
Yeah.
The answer is robust thinking and migrating to the future, not cliff edge futures. You've got to migrate naturally to new technologies. And I've said for actually a few decades, I never want to be bleeding edge on the technology. I want to understand what's coming. I want to be a fast follower. So that we can always have the robustness of the TT platform there for everybody.
Yeah, that makes sense, of course. Yeah. Well, Keith, thanks so much for taking the time to join us. I know you're very busy. Yeah. Thanks for sponsoring this outdoor area. It looks very cool.
It certainly does, and thank you very much for your time.
Likewise.
Really appreciate it.
Hope to see you soon. Good luck. Thank you.
Thank you.